let's start it. That's good. If you guys have any questions, please. Oh, there is someone joining us. If you guys have any questions, please just let me know, and just type in or unmute yourself and talk to me. That's not a problem. Okay. But let me start addressing some figures that we got this night from US. Just put my time zone. Okay, so if you guys haven't watched yet my video on YouTube, we've just uploaded a video on our YouTube channel talking about this one. So if you haven't watched it yet, yes, the US GDP came up lower than expected. As you guys can see. Can you guys hear me well? Because my computer just popped up a message saying that my audio is not good. So if you guys can't hear me, just type on the chat. I wanna make sure that it's all clear. Anyways, so we just had the GDP came up this morning for us in Australia. Thanks to Steve. And it was lower than expected, was 3.2%. I've mentioned that on Tuesday. Yes, I've mentioned that on Tuesday because even though if we try to go through the Fed statements, I can show this later, but we had Jerome Powell saying that on Q3 of last year, 2023, we would have a much stronger GDP due to some factors I can't remember. Consumer spending as well as demand. Because the demand was tilted to the upside. Therefore, we would have a stronger than what the market was expecting. That could surprise us, and it indeed did surprise us on last year, having a much stronger what expected GDP. But then he mentioned as well that after Q3, things may get lower. Okay, I really want to know if I can show it to you guys. Jerome Powell, when was that? Q3 GDP. If I type that, can I? No, I probably won't be able to. Maybe this one. 12 to 13, 12. Nope, it was before that. Anyways, I won't be able to find it, but you guys can trust me. That's what he said, and indeed he was right. So now, what can we expect from the GDP, right? Because if he said that GDP would start to slow down from Q4 ahead, therefore he was right. 3.2 expected was 3.3%. We had 3.2%. We didn't have much of a decline exactly on the news time. That was midnight for me here. We only had these candles here, but see how afterwards we had the core PC prices. It was good, right? It was 0.10% higher than expected. Let me just, someone is joining. It was 0.10 higher than expected. Therefore, these sort of balance it for this minute, okay, for this minute. But as we can see right now, US dollar is tanking. Okay, let me put in the 4 hours. It is tanking right now, especially at Europe Open right now at 8 o'clock. Okay, when we had I think it was I think it was this morning, we had a uptick, but now Europe sellers are getting on board. Okay, anyways, moving ahead, we did have crude oil investors, as always we have. came much lower than much higher than expected. So there is more oil on the inventory. So what does that mean? That the price may reduce a bit. So if we look at the oil prices, prices may reduce a little bit because we have more than what we expected to have. Therefore, the prices we have to reduce. So that's basically supply and demand effect. Then we had this morning, where am I looking at? Yeah, 11:30 here. We had private new capital expenditure for Australia. Indeed, it was good, but Australian dollar is suffering a lot, okay? And I will talk about that in a second. Then we just had at 6:45 p.m. on my time zone, we had the French CPI as well as the French GDP and the French PPI and the HICP. Okay, so let's have a look at the numbers. French CPI year over year higher than expected, month over month higher than expected, and the GDP as well higher than expected. So what are we having there? We're having a higher inflation as well as a higher gross domestic product. That is pretty good in terms for the euro. As we can see right now, euro is going up. Let me put in a 15-minute chart. As we can see, euro, it is going up. And as I mentioned, I had a long position. I still have a long position somewhere around here on Tuesday when I say that the euro could go up because, you know, we were making lower lows, and then we make a higher low, and then now we're making higher highs. Therefore, shows to me, someone is joining, that way shows to me that the the US dollar, it is weakening at this moment. Okay, yeah, there are a few reasons, of course, you know, especially because of the GDP, as well as a now French CPI higher, as well as the GDP. It does help a lot. Then we had GDP for CHF, Switzerland, okay, much better than expected. So we had 0.3% here than what was expected at 0.1%, okay, so 0.2% higher than expected. Hey, Kumalo, how are you doing, man? Good to have you back. Spanish CPI, we did have it as expected, okay, year over year and month over month, so nothing crazy there. Unemployment change on German was a bit higher than expected, and then this is it for now. Saxony CPI, yeah, cool. What else we have for tonight? We don't have anything else for now, but for tomorrow, in a sense, probably doing like probably today for you guys, we're going to have German CPI. So that is a very big one, okay? Look, if we go and just do a simple comparison, okay, just do a simple comparison here. If we take the French that it's on Europe, as well as, where is it? Bavaria, as well as Saxony CPIs, we had a higher month over month and higher year over year from France, okay? So that's one point that we need to pay attention, that has as well may bring inflation up on the German, okay? If we have a German inflation up, that's going to be very, very positive for the euro, okay? You guys already know, I've explained this so many times, but if you don't have a clue why, just let me know on the chats and I will explain to you. But that's pretty much it for today, okay? Now for tomorrow, we're still going to have the GDP for Canada, as well as manufacturing PMI from China. That's very important, but that's like 12:30. And the most important, we're going to have Europe CPI, okay? So make sure to watch Europe CPI. That's going to be very, very important. Now, let's go to the charts. As well, as I said, you know, we may be trending higher here on the euro dollar. I've mentioned that. Where's my pen? Where's my pen? My pen is here. Okay. So we broke these lows and then we made a higher low and we broke those lows again, made a higher low, and we broke those lows, higher low, broke those lows, higher low, broke those, made those lows and broke those higher lows. So therefore, feels like the market is changing. I don't want to use this word because it's so used, but feels like the market is changing a character. That means market is changing the way, simply as that. Okay, market was trading low and now market is trading high. As well as I'm just looking at my other screen here as I'm talking to you guys. Let me share very quick. We are having the S&P 500 mini declining. Okay, therefore there are lots of short orders fulfilling on the book. So let's see how the euro will react to that. Okay, therefore if S&P 500 goes down, the US dollar tends to go down as well. Okay, but coming back from what we usually do. Now, talking about the euro dollar, okay, first target would be 109 if we do continue to go up, okay. 109 would be the first target, okay, just taking these highs off. And oh, that was actually a nice short position on S&P 500 just now for scalping, but I'm okay. Damn it. Let me just take the chat again because it took it off. Someone want to join us? Cool. So we broke the simple moving average 200. Now we are trying. Let's see how we're going to react to the German CPI and so on to do this move here. Okay, so we're trying to go up. Do I think it's possible? I do think it's very possible for this to happen. Okay, now if we go to the 15-minute, we've just created a little consolidation. We've broke this consolidation, came back to retest, as well as the 200 exponential, simple moving average. Therefore, the next, where's my pen? That's not what I want. The next one that we would have to break up is this area here. Okay, it's this area that would be the first resistance to us, and then after that that would be the one, and then after that that's going to be very easy for the euro to get to the 109. Okay, because it's very close, so just here. Now when do I think this will happen? Look, if we have an actual higher German CPI, that may can occasionate a tick, a tick on the euro to go up. And even though if we have a German CPI higher than expected, as well as a Europe CPI higher than expected, then this is gonna put the euro dollar above 109 pretty easy. Okay, again, this is not a recommendation, I'm just telling you guys what I think. Now feels like, okay, that we are on a pretty consistent area, because if we look, we haven't actually breached the lows, because there was this one here. Okay, I'm not going to count that as a break on here because it's too little, even though if we put on a 30-minute on a 1 hour, let's see, what do we have? Yeah, we do have a little break, like a very, very shy breakdown, but not too willing to trade the euro down at this moment. Okay, let's have a look at FinLogix at the retail tool. Oh wow, S&P mini S&P 500 futures are going down, baby. Okay, if it loads, that would be good. Okay, go down, go down, go down. There you go. I want euro dollar. This one. Oopsie. Okay, this is Aussie CAD. I don't want Aussie CAD. I want Euro. Okay. All right, that's 60% long. That's not what I was looking to get. I was looking to get mostly of the people short. Okay, let me confirm with my terminal here as we go through. Anyways, so coming back to euro dollar, what do you guys think about euro dollar? Are you guys trading it higher? Are you guys trading it lower? Let me know. Now, talking about USD JPY, right? We had inflation on Japan higher than expected, and I'm gonna be honest with you all, right? And I did even mention that I wasn't expecting Japanese yen to get so much strength as it is gaining right now. So it makes me think, okay, are the Japan really gonna intervene it? Because I don't see a reason for their intervene right now, as this strength is pumping up on Japanese yen at this moment for now. Okay, but remember, guys, I'm not I don't have a crystal ball, and they can come in and just manipulate again. Because I think I was talking to someone at the office. I forgot who it is. I think it was you, Van. Can't remember now. And he was like, "Oh yeah, that was Peter. That was Peter Pan on the podcast." He was like, "US was saying that the best thing that the BOJ does, that's the Bank of Japan do, is manipulate the Japanese yen." Are they wrong? No, they are not, because they do manipulate the Japanese yen quite often. Okay, quite often. Okay, guys, so I have it here, all the positioners. Let me just show you very quick. Where's my pen? That's not quick. I want quick. Okay, cool. This is euro dollar. Okay, just at the bottom here. The majority is short and the minority is long. So therefore, we would be looking to go as the minority, going on the long position on euro dollar. So yeah, most probably it switched on the FinLogics, okay, because 60% is long. If we look on euro dollar here, even though, yeah, let's have a look on here very quick. Okay, yeah, it's changing here. Okay, so anyways, yeah, this one is wrong for now, and I'm looking to trade long. Okay, that one was wrong for now, and I'm looking to trade long. That's a cool phrase. Anyways, going back for USD JPY, I'm gonna take a trade on S&P 500 mini. Okay, let's see how we go here. Okay. Okay, let's go. All right, USD JPY. As I was just mentioned, we did had a stronger than expected. Let me put on this week here, so we got the data that I want. Japan. There we go. National core CPI higher than expected. 0.1% higher than expected. 0.1. That's not wrong. You guys heard it right. 0.1. That's 0.10% higher than expected, and just occasionated this move. There's lots of reasons why it actually occasionated this move. Not only because we had the CPI, but as well as we were on a very high area at the charts. Okay, we've tried to breach once, twice, 3, 4 times. Therefore, it was a good area to actually short USD JPY, but still, JPY is a weaker currency against the US dollar. Right now, the only reason why it is going down, why the Japanese yen is actually getting, it's because investors think that the BOJ will intervene. Remember, the level of 150 was the big area for the BOJ, the Bank of Japan, intervene multiple times. Therefore, if you are an investor and you look at USD/JPY, the level as it is, you may think twice to buy it. Okay, so that's one of the reasons. The second reason why the US dollar is getting so weak, lots of comments have been mentioned, have been made through John Paul, but most importantly, the data is coming from US is cooling off, it's cooling down. Okay, and if everything goes right on this way, we may have a stable US dollar throughout March, but then after that, I'm expecting, maybe half March, second half of March, let's call like that, end of March, let's call like that. We may have a very weak US dollar, and therefore I would be willing to buy euro dollar, on my full position size, as well as pound dollar, and so on. Now, so my perspective on USD/JPY, not too keen to trade this right now. Okay, not too keen to trade this right now. Too much, because if I were to trade, I would be trading on the long position, and I'm just afraid if Japanese yen, if the BOJ, the Bank of Japan, do something and I get caught offside. So that's the only thing that makes me think, okay, maybe it's not a good option for myself. But if it fits on your strategy, then yeah, that go for it. If you think that you have a good trading idea on USD/JPY, what holds you back? It's not gonna be me, boys. Let's do it. Anyways, now moving to pound dollar. I've mentioned, let me take this off because that's just pissing me off. Let me take all of these. Okay, 4 hours. All right, what have we done on 2024? Nothing. Okay, we started 2024 right here. Oopsie. Started 24 right here, and we are right here. We moved 435 points. That's 43 pips. We've moved 1.36% up, 0.80% down, and right now we are 0.35% from 2024. Now, what do I think about GBP USD? Well, again, pretty similar to the euro dollar, okay? But I just want to highlight that there is a very big resistance on this area that the market may be suffering to pass through that. But again, fundamentals speaks louder, okay? So let's have a look on what's happening on the fundamental side. First, we did have a higher inflation for the UK, okay? We did have better core sales for UK, all right? We are having hawkish neutral comments from the boy for the Bank of England, okay? So all it's pointing for myself is that the pound is stronger than the euro, okay? Because remember, the Europe did have very good data coming from them, but not as good as the pound, okay? Therefore, when we compare those both, if we look at Euro GBP, I think it's going up right now. Yes, it is. But look at how bad it was last year, okay? So I do believe that this will continue to go as it is going down, okay? Now, talking about the pound, just back again, when we see it's exactly happening, very similar what was happening with euro dollar, right? We're making, where's my pen? We're making higher highs, okay? We're breaking those highs. So the next one we have to break is this one. But remember, we haven't breached below the low, okay? So we went up, made the high, went down, and now we are trending, ranging, came back, maybe we will continue to go up. So first area that would be of interest for me would be this one here. Let me zoom in. Somewhere around here. Okay. Even though if you wanna put a trend line here, you know, something like that, or something like this, whatever suits you. All right. We embrace all. Now, if as I was saying, if we break this through, then the next area will be this high here, is that it's the main consolidation, and after that we have the resistance there. Do I think that this is possible? Well, between the euro dollar and the pound dollar, they move very similar. But between those two, I still believe euro dollar has a better potential than the pound dollar. Okay, are you guys following up with me? Do I need to go a bit slower? Is everyone okay? Do you guys have any questions? Please put in the chats, legends. All right, moving forward. Someone want to join us? Someone is late to the party, but let's go. New Zealand dollar. What did I mention about New Zealand last week? I think it was short, wasn't it? Can't remember now. Can't remember. Anyways, this is a big boy. Maybe I leave it to the end because I want to show a few things. Aussie dollar as well. It's a big boy. Maybe I'll leave it to the end. Gold. Let's talk about gold. Okay. Remember I've mentioned that if we zoom out on the picture, if we zoom out on the if we zoom out on the picture, what you guys can see here on gold, it's something pretty simple. Nothing out of this word. What are we having? We're having a consolidation. Okay, we're having a consolidation. Now, what do I think will happen from here? I do believe if we breach through the 240, the 2040, okay, that this is level here. Let me take this 2040. My cat's meowing. If we breach through this level here, most probably we will go to the 250, 255, sorry. Okay, 2055. And I'm long on gold. Okay, I'm long on gold. You guys don't have to trade what I'm saying, but I'm just want to make it public. I'm long on gold. I think I'm long here, if I'm not wrong. Let me get my MetaTrader up. I'm on 2037. All right, 2037 is 2037.09. That's where I'm long. Okay, so my position is right here on this green line, and I'm looking to trade this until the 2055. Okay, just looking at what will happen on 2050, and if we breach through the 2040, I will continue to hold this trade for a while. But for now, I still believe that we can go higher. Now, what would be the catalyst for this trade? Bad data from US. Okay, and as I've mentioned, we still have a few more data coming from US this week, and that will bring through the gold up. All right. Okay, there is things happening still on Israel and Hamas. I'm not saying that this is not the focal point anymore, right? I don't want to talk too much about that because, you know, everyone has your own ideas on what's happening. But in a sense of, yes, it do affect the commodity price, but at this moment, I'm not saying that this is not important, but the market is looking to other events, okay? That would be the word. What are they? Central banks. Okay, what are central banks doing? Second of all, data from US. Okay, when we get gold, what are we trading against? Trading against US dollar. Okay, therefore, that will emphasize the US data. Whatever comes from data on US, it will have a impact on the gold. So we did had bad GDP from US. There you have it. Okay, up move on gold. Now I want to hear some comments from the Fed, but unfortunately we don't have. Yes, I will talk about Aussie dollar, but we don't have any speaker, all right, from Fed at the moment. I would love to have it to see what are they doing. Wow, they just hit a big position here on S&P 500 mini. But anyways, so that's my take on gold. Okay, I'm still long on gold, looking to go to the 255 area, just trading the range, guys, just trading like simple trade, you know, nothing crazy, I would say, just here, right? Getting this box sorted out. This trade can take time. Yes, it can take time. That's not a problem. Like, we're not going to make money from day to other day. All right, if it happens, that's fantastic, good on you, like congratulations. But like, take it easy, you know what I'm saying? Like, we're all young here, so we have the whole life yet to learn, to get things wrong, to redo the things, and so on. Okay, so again, long on gold. Okay, this is my position. I'm just sharing my portfolio with you all. Now, WTY prices. Okay, that's the one I was looking to go short. I don't trade oil. Okay, so I'm not saying that I will go short and I will actually place a position on short. No, but it's just because we had higher inventory. That means that we are having more than what the market was expecting to have. Okay, therefore, if we have more than expected, okay, let's put in this situation, right? We have one bakery at my city, right? That's only a fake position, right? Let's just imagine this. You have only one bakery at your city. Now, who can put the price on the bread? They can put the price on the bread. Why? Because they are the only ones. They are the owner of the price. Okay. Now, if we have two bakeries at your city, well, now he has a competitor. All right. Therefore, it will have more supply. The society will continue to demand as they were demanding when it only won. But once it picks it up, then they will have to compete on the price. Okay, so if one of them has more supply than what the demand is actually asking, they can lower the price because they have much more on what they are what they were expecting to have. Therefore, they need to lower the price to sell those things. Okay, and this is what actually happening here on the oil supply. Okay, if we look at the oil supply, the inventories is the you good, Fredro? Have a good day or a good night. Don't know where you are. So see you next time. Join us next time, man. See you. Now, thanks for letting me know you're going. Okay, so they were expecting 3.1 million and 100,000. Okay, 3 million and 100,000, and it actually came 4,199,000. Okay, that means that they are nearly a million. Sorry, they are 1.2 million, nearly 1.2 million up on what they expected. Okay, so that's a big number. So what am I looking? As we can see, we did had a little drop here. What am I expecting? Well, of course, there are much more things than only, you know, the oil inventory, but I'm expecting the prices to drop again for 70, 72, 71. Okay, 72, 73. That would be a good trading range. But we had 1, 2, 3, 4, 5, 6, 7, 8 times trying to bridge to the level of 80. We just couldn't. Okay. If we break to 80, then my gasoline would be very expensive. But anyways, it is what it is. So that's my take on commodities. Okay, not looking to trade oil, but we're expecting it to go down and trading gold going up. Now let's talk in the last 20 minutes about New Zealand dollar and Aussie dollar. All right, I have a short position on Aussie dollar somewhere here. But I don't know what was the price. Let me check. I think it was exactly here on this area here. So now if we go to the RBNZ rate statement, if we go to RBNZ rate statement, we can see that the market did drop a lot on the last Tuesday, right? If we look at, we had I think it was on Tuesday. Let me have a look here this week. Where is it? Tuesday. Oh, there we go. 11:30, 12 p.m. on Australian. We had the RBNZ rate statement, and we had a rate decision. That was pretty solid rate decision because everyone, the whole market was expecting 5.5. So no hikes in there. But once we looked at the rate statement, that was the most important one. They call it OCR over there, the official cash rate. Same thing. Nothing changes in there. Let me just drink a bit of water here, guys. Just a second. Okay, cool. Sorry. When you're speaking 40 minutes without stopping, your throat gets very dry. And if you don't drink water, that gets worse. Okay. Now, when we look to the RBNZ, as it was expected, we did had a pause, as I was just mentioning. But the pause was expected, so that means that that was priced in already. Okay, so what was most important, what the market was actually expecting to look, was the rate statement. Okay, and that's what we're going to go through right now. Okay, all right. So yes, I can have a look on GBP pound, on pound JPY. Just let me go through this pretty quick, and we go through that as well. Now, over the past year or so, the New Zealand economy has evolved broadly as anticipated by the committee. Core inflation and most measures of inflation expectations have declined. Okay, stop there. Where's my pen? There we go. I want the highlighter. Yeah, that's the one I want. Okay, so the New Zealand economy has evolved broadly as anticipated by the committee. Core inflation, let me take this off. Core inflation and most measures of inflation expectations have declined, and the risks to the inflation outlook have become more balanced. Okay, so that's very important on what they're mentioning here. Okay, I'm going to put in red because red is bad for the New Zealand dollar. Okay, more balanced. So what are they actually saying here? Well, simple. They are pretty much saying that they are expecting the inflation on New Zealand to decline. Okay, so they have a more they have an outlook, that would be the exactly word. They have an outlook to the inflation to become more balanced. Okay, so not much. They're not expecting anything crazy. Okay, however, they continue. Headline: inflation remains above the 1 to 3% target band, limiting the committee's ability to tolerate upside inflation surprises. Okay, so this is pretty obviously, right? All the central banks, they have to say this to let the people know, the society know, that they know that inflation is high, this and that. Now, restrictive monetary policy. Oh, as well, what does this means to us? Okay, let me do a little line here. What does that mean to us? Let me put in black. What does that mean to us? Well, that means that they, if inflation goes up, let me put if CPI, just in black. If CPI comes higher, or actually if CPI comes out of committee expectations, expectations, they may hike the rates. Okay, that is what I can imagine from what they've just stated here. Okay, now restrictive monetary policy and lower global growth have contributed to aggregate demand slowing to better match the supply capacity of the New Zealand economy. So that's good. With high immigration and weaker demand growth, capacity constraints in the New Zealand labour market have eased. Good. However, recent high population growth is supporting aggregate spending, as evident in upward pressures on dealing rents, for example. Okay, this is a bit tricky right here, okay, because we have population growth and it's supporting the aggregate spending, because then what happens if we have more spending? We have more inflation. Okay, so just keep that in mind. Now, going down, internationally, globally, economic growth remains, okay. Internationally, global economic growth remains below trend, as expected to slow further during 2024. Okay, pause here. Oopsie, not in blue, this is in red. So global economic growth remains below trend and is expected to slow further during 2024. This subdued environment will support a further moderation in New Zealand import price inflation. Okay, although this is bad, not only for New Zealand, but as well for all the countries, because as we've seen, we just had a lower GDP from US. New Zealand is expected a little improve, a little support, as they call, on the import price. Okay, the outlook for China economy remains particularly weak relative to recent historical norms, with structural factors constraining long-term growth. A more general risk to global growth is that the central bank may need to keep policy interest rates as restrictive levels for longer than currently reflected by financial market pricing to ensure that inflation targets are met. Remember, guys, if China don't go well, Australia and New Zealand dollar don't go well as well. Okay, just remember that. All right. Heightened geopolitical and climate conditions remain a risk for inflation. The recent rise in global shipping costs is one manifestation of these risks. The committee remains alert to these relative cost pressures and will act to limit spillovers into general inflation if necessary, as I've just mentioned. The committee remains confident that the current level of the OCR is restricting demand. However, a sustained decline in capacity pressures in the New Zealand economy is required to ensure that headline inflation returns to 1 to 3% target. The OCR, that's basically the rates, needs to remain at a restrictive level for a sustained period of time to ensure this occurs. Okay, this is actually good for the New Zealand dollar because they will maintain higher rates for longer, as they need to control the demand as well as the price, the import price inflation, and controlling all of these bring in the rates to the inflation to 1 to 3% band. Okay, so when we look at this, we do have a very how can I say, a very complete and easy way to understand what is happening on New Zealand. But when we think about, if we had more good than bad here, we had much more bad than good. All right, the only good thing would be the rates maintaining higher for longer, because this would drag New Zealand dollar up. And what else? However, headline inflation, the core inflation, most measures of inflation expectations have declined. So that would be the only good things for the New Zealand, and not good for the New Zealand dollar. Therefore, once we had, let me take this down. Once we had the news came out that this happens, okay, and that was very quick. That was very, very quick. Okay, this is 1 hour candles. So looking at this, I do believe that not that the US dollar is stronger, it's that because the New Zealand dollar is weaker. Now, then we look to the Australian dollar. Okay, Australian dollar has followed the exactly same pattern as the New Zealand, because they are very big trade partners. Okay, so remember, when I've just read it through you guys, that the New Zealand, the RBNZ stated that they need to control the supply and demand. Therefore, they will need to stop buying for some countries and continue to buy from other countries. Therefore, this will affect the Australian dollar. Combine it with a lower inflation from what was expected from Australia. This made the Australian dollar very weak. Again, it's not because the US dollar is, wow, it's so strong. No, it's because the base currency, Australian dollar and New Zealand dollar, are very weak. When we get both of them combined, we can see that the Australian dollar is stronger than the New Zealand dollar. Okay, but still, both of them are very weak trading against other currencies. Okay, so this is my take on the Aussie dollar and the New Zealand dollar. Did I ask your question, Casey? Now, going to GBP JPY. Again, this is was at least a good trade to have on the portfolio on the short. Again, it's not because JPY is normally is strong. It's not because of that. It's because the market, it's not certain what the Bank of Japan will do. Therefore, they are stepping back. Okay, and they do believe, feels like that the market believes, the investors believe that the Japan will hike interest rates, and therefore this is what we've seen the Japanese yen so strong in the last couple of days. USD JPY, CAD JPY, CHF JPY. If we go to Aussie JPY, okay, it's not because the base currency is so weak, it's because investors are actually thinking that there may be a possibility for hiking on the bodge, right? I would maintain, as I've just mentioned for USD JPY, I'm maintaining myself out of Japanese yen at the moment, so I can't actually have any like good answer for your question, Kumalo. Sorry for that, but if investors continue to believe this will actually happen, then of course short positions would be welcoming on the long position would be welcoming on JPY. All right, guys, do you guys have any more questions? How are we looking like? Let me take another sip on the water while we're waiting for your questions. Feels like we don't have questions. All right. Oh, you long GBP JPY? Wow. Yeah, if it fits on your strategy, then it's your strategy. Oh, it's copying. Okay. All right. All right, guys. So this is all from me today. Thank you so much for joining. That was very good. I think it was very informative. If you still have any questions, you know how to find me on my Telegram, and we talk next Tuesday. Hope you guys have an awesome weekend ahead. And guys, remember, take it easy. Life is too short, right? Have a good one, guys. See you next week. Bye-bye.